What's up, guys? This is Jimmy. This is another show. This show is all about your mind, your beautiful mind. We're going to talk about different biases, why people are losing money, how you can be different, and why emotions are actually not really a bad thing. Before we move on, I'm going to play an ad of our very respected partners and sponsors, but I want you to think for a few seconds and let me know in the chat, and because this is the only way how I can really help you. What's your biggest struggle when it comes to trading from a trading psychology point of view? Maybe also from a strategy point of view. It doesn't matter. Let me know in the comments your biggest struggle. Let me know, guys.
Trade limitless on HMX, the next gen decentralized perpetual exchange. Trade crypto, FX, and commodities with up to 1000x leverage on the Arbitrum network. Benefit from low fees, multi asset collateral support, and cross margin flexibility. Check them out.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
You hear that right. There's no stopping us. And this is also really true for those who are investing in themselves. I think you guys should all deserve a shout out, really, all of you, every single person there listening to me at the moment or listening to a recording later, because you guys stand out for a few reasons. One, you guys take yourself serious and trading serious. Thus, you invest your time in high quality live streams, and probably you're also those guys who invest in books and invest in themselves. I truly believe in ROE, return on education. The better the quality of your education, the more likely you're going to yield a lot of profits. So a big shout out to every single one of you guys. I want to hear some names. I want to see some people. Feed me with your energy, guys. I see Nick, I see Zenkert, I see a few other guys. Hi, guys, nice to meet you all. When to liquidate, when is enough? Sell and buy back. We have Wak Shah. Sorry for if I pronounce your name not correctly. This is actually a really good question from Nick. When is enough? My principle is, if you don't know what is enough, nothing would be enough. If you don't have like a vision that determines, okay, this is enough for me, or I'm happy with this, or it's really time to lock in these life-changing profits, money. And if you don't have this in your mind, nothing is enough. Nothing is enough. Even if your account is going to do like 2x, 10x, 100x, even 1000x, if you don't know what's enough, you're just going to chase the next dollar, the next gem, the next trade setup, the next hot thing, next narrative. You should have a limit, as in, you should have predetermined a level where you know, okay, this is good, this is enough, this is time to skill out, this is the time to redistribute my wealth, this is now the time to reallocate my money, or this is now the time to rebalance, if this makes sense. If you don't know what's enough, you will be left with uncertainty, and you will be paralyzed by the market. The market is really good in paralyzing us, to be honest. If you think about it, the market is living 24/7, every day, every night, every midday, every afternoon, 24/7. It doesn't sleep. We need to sleep. We need to, reconsider things. We need to consolidate all that information that we have absorbed. But yet we are kind of addicted to information, and really, information is actually an addiction. If you look to it from a perspective of, we people are always seeking for information, but there's a limitation. we cannot absorb all that information, sooner or later. And now I'm going to give you a key takeaway. Sooner or later, we absorb a lot of information, digest a lot of information. Our brain cannot process all that information. So sooner or later, we're gonna distort that information in such a way that it fits our view of the world, or we're gonna delete some information. Like literally, your brain is able to delete information, or we're gonna generalize information in such a way that it fits our world through our the way how we see things. And that's actually a magical moment, to be honest, because when that happens, a lot of biases and fallacies and pitfalls will occur. A lot of them. Hi, guys. Uh, Again, guys, I would love to make this session really interactive. We're going to go through a few slides, then we're going to go through a few charts, and then and meanwhile, I want to hear you guys as well. So smash that like button, please. Smash that like button and let me know in the comments where you're from. And also, if you give me copper, I'm going to give you silver. If you give me silver, I'm going to give you gold. If you give me gold, I'm going to give you diamonds. Meaning, the more you interact with me now in this live stream, the more value you will get from me. Okay, guys, let's start, and let's start actually with a few things. We mentioned already, like the mind and the subconscious mind. So what is actually the mind? What is actually the brain? And is the brain the same as the mind? And is this really important to know and to understand? Well, first, you need to understand that all of us, I hope for you, we all have a brain, right? This is just a physical organ, and it's basically the most complex organ you have, and it's responsible for a lot of things. It's responsible for controlling and coordinating your body's function. It's there to receive, process sensory input. So you tap actually into this world through your five senses, and your brain is you're processing all this information. It's there to generate thoughts, emotions, and it triggers behavior. Okay, that's actually your brain, and your brain is really complex. It's also really it consumes also a lot of energy. Your brain is responsible for 20% of all your energy consumption, and yet it represents like a few percent of your body weight. Your mind, on the other hand, is um, it's actually responsible for the subjective experience of your consciousness. And this is a key word, guys, in trading: consciousness. We are so easy to get overwhelmed by information about ETF, about all things, about price going up and down, FA catalysts, Twitter, YouTube. You understand? There's a lot of things going on, and all these things, when you watch them, when you read them, they're gonna have an impact on a few things: your thoughts, feelings, and your perception. So your brain and mind are interconnected. But here's the thing: the mind can change the brain literally in such a way that if you're overwhelmed by stress, you're losing money, and this triggers your amygdala. You're in this fight, flight, freeze modus. This will have an impact on your brain, and it can even shrink some parts of your brain in such a way that this will have an impact on your decision making process, like the way how you process information, how you make decisions, and how you and when you know long and short. Even though you have a strategy, it's so easy to deviate from that strategy if your mindset is not fixed. Okay, guys. um I think I talked enough about brain and the mind. We know now what the mind is. Later on, we're going to talk about emotions and how they correlate to our trading systems. But first, I want to do a puzzle with you. I've seen some of you guys on our Discord. That we share a lot of good things on Discord: trade setups, write ups, tools, journals, trading few indicators, and so forth and so on. But I haven't shared yet a puzzle with you. So let's do a puzzle, okay? And don't look on the internet, okay? There is a bat and a ball, okay? Together they are $1.10, okay? The bat cost $1 more than the ball. How much does the ball cost? I'm going to give you a few seconds. And I want to see answers actually right now in the comments. I know there's a lag of a few seconds, so I'm going to give you guys the benefit of the doubt. So the bat and the ball, they're $1.10. And the bat costs $1 more than the ball. How much does the ball cost? Quick, guys, I want to see some answers. This is indeed an old one. This is indeed the old one. Kahneman came with this one. And it's indeed not like 0.5. I think you meant 0.05. Like it's 5 cents. It's 5 cents, guys. Let's do another puzzle. And I know this is like a quite old one, but this one, I don't think this is a really old one. This is, just see this as a cognitive reflection test. A mother and a daughter are 50 years old in total, like together, if you sum up their ages. A mother and a daughter are 50 years old in total. The mother is 20 years older than the daughter. How old is the daughter? I'm going to give you guys also a few seconds to reply on this one. And I hope you guys don't know the answer, to be honest. Okay, why I'm doing this is we people we tend to provide answers and to think from our gut feelings. I know for a fact that a lot of people, they would say like it's 10 cent, it's 10 cent, it's 10 cent, but it isn't. It was really 5 cent. And yeah, smart people. Well, Meryl, I'm really proud of you guys. Thank you very much for answering it. So understand that the market is, it's only emotions. Like if you check the charts, you're gonna see a lot of emotions. You're gonna see like denial, anger. It goes from belief to disbelief, from euphoria to anger, from panic to hope. But wait, what is actually an emotion? If you think about it, what is actually an emotion? Has anyone um, an idea what an emotion actually is? I'm really curious. What is an emotion, guys? We talked so much about emotions, yet there are a lot of people, they cannot really define what an emotion is. Um, so let's do it, guys. See emotion as a psychological and a physiological response to a stimuli, to an event, and it can be triggered. And this is important, internally and externally. So meaning emotion can be triggered just by thought alone. Okay, if you're in the car and you're thinking about that bad fight you had, for example, with your wife, with your coworker, with one of your friends, with your colleague, with me, for example, this alone can trigger a lot of emotions. Like it can trigger a series of emotions. Another way to see it is emotions are actually information, especially when you understand the basics of market psychology. It can give you so much information, and if you have like a strategy, and on top of that, if you understand market psychology, it's going to give you an edge. What you need to understand about emotions is actually a few things. One, emotions are not the enemy. Two, emotions cannot be fully controlled. Okay, they just happen. According to a lot of psychology, like human psychology, we believe that emotions, they play a role in our survival. It plays a role in our social bonding and decision making. Today we're going to talk about that, about survival and about social bonding, and why hurt bias is a really ugly bias. But it's really difficult to divorce from the hurt bias for a few reasons and your decision making process. Um, this is a chart, okay? Um, yeah, this is a chart I was looking for. Let me go to the 3-day chart. This gray box here, it looks so simple, but yet it's actually representing a lot of emotions. If you think about it, like let's do this together. We had like this epic COVID crash, okay? And then things went up. This horizontal box or line, however you want to call it, has been tested like a few times, right? We went up, went a little bit down. What kind of emotions have appeared here, you think? Well, I would say some hope, perhaps some denial, stress and anxiety, because after such a big move, this was a really big move. This was a 964% move. And you don't know, if you would live here, right, and you don't see this, and Bitcoin is like, on the lower time frame, you would see like, some form of consolidation. But now imagine you don't know what happened, after this move. There's a lot of euphoria, but some people they experience depression. Some people they because they long this long week, they would think, wow, uh, it's finding some form of support. And this is actually the way how to think. How do other market participants think? We have this crazy rally then here, which was another. How much was this? Everyone was in euphoria, like another 100% move. And then we went all the way down. What kind of emotions was he? Just think about it. What kind of emotions could you label to this price action? And then it went up again, and then here again. This is like a textbook example of a bearish retest, and then it went all the way down again, and then it was testing this level. What kind of emotions do you see here? Well, I would say I would see hope, uh, probably also denial, and the same for here. So understand that emotions play a big role, and it's not your goal to eliminate your own emotions. It's actually to translate your emotion into information, because the way how you think, most likely others will think probably similar. Hope this makes sense. If it doesn't make sense, just tell me, Jimmy, this doesn't make sense, and I will try my best to you know try to re-explain this. So these emotions, but also the way how we digest information, can cause us to make a lot of thinking errors, biases. It's okay to have like a directional bias. I don't think there is anything bad with that. I think all of us should have like a directional bias. Otherwise, you cannot trade. Otherwise, you cannot um, buy. We all should have like some form of conviction. But there are biases that will toy, and it will disturb your the way how you uh, perceive information. So one of the biases, um, well, actually, there are a lot of biases, but I want to talk about the biases from a NLP point of view. Not sure if you guys are familiar with NLP. NLP stands for Neuro Linguistic Programming, and this is basically one of the basic models of NLP. The presupposition is we are bombarded with a lot of information According to some tests and researches, it's around, I don't know, 5 million, 20 million bits of information, all bombarded, bum, 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 every day. If you wake up, you check your phone, you go outside, the traffic, the people you talk to, the things you read on the internet, you consume a lot of bits. Your brain cannot um, tap into all that information. So it's going to filter out some things. So you tap into this world through your five senses: the visual, auditory, kinesthetic, ear, smell, and taste. But we don't see things as how they are because we filter things in such a way that we basically delete information, distort information, generalize information. And this is the root cause actually of a lot of biases. So, what are the filters actually? It could be like attitudes, it could be values, it could be like your meta programs, your personality characteristics, your memories, the pain you have suffered. And if it goes like through these filters, you're gonna create like a state, like an internal state. And this state will cause your body to react, and your body's reaction again will uh, give feedback to your state, and then you will get stuck in this state. This is actually the NLP communication model. In other words, we tap into in this world through our five senses. We don't see things as how they are. One of the NLP presupposition is the map is not a territory. It's simple as that. The map is not a territory. I hope this makes sense, guys. If it doesn't, let me know in the notes. And based on the information and the way how we tap into the world, this will eventually result in behavior. It could be like a desired behavior or bad behavior. There are actually a few biases I want to talk with you guys here. And not sure if is someone familiar with post-purchase rationalization. This is a really interesting one. I don't see a lot of people talking about this one. I'm going to give you an example from a non-trading context and then an example from a trading context. Post-purchase rationalization. Okay. Let me check in the chats if we have smart people know what this bias actually really no one? Doesn't matter. It's also known as choice supportive bias. An example: I go to a shop and I buy, let's say, like a coffee machine, a stupid coffee machine. Let's say like an espresso, and I come back home, and then I start to read the manual. So I'm, reading things about the coffee machine, and I understand that it could create like two different coffees for me, and it can create like 2 bar coffee. Like the pressure it puts on the beans, it's 2 bar. It's easy to wash. And then people are starting to ask me, well, why have you bought a stupid Nespresso? Well, because it has 2 bars, and because of this, and because of this feature, and because of this feature. So what we're actually doing is you're rationalizing your own purchase. And this is also a little bit related to confirmation bias. The same goes if you buy a coin. Let's like, for example, Link. You buy Link, you have it on your wallet, obviously cold stored, hopefully for you. And then suddenly you're starting to read more about Link. I'm not saying that Link is a bad thing. I'm a big fan of Link, but this is just an example. And then suddenly you're starting to follow the team, checking the Telegram, reading more and more stuff about Link. And this will basically support your purchase. But what it also does is it's going to subconsciously it's going to delete or distort information that contradicts with how you see link as the coin, right? Link. Does this make sense? And this is applicable to basically everything what we can purchase or buy. There's always some form of post-purchase rationalization. And this is one of the reasons why people, when things are going up, because they rationalize their purchase in such a level, that they are not able to sell. It conflicts with their the way how they have rationalized their purchase. And ask yourself, all the coins you have bought, or all the assets or stocks, or I'm not sure, what kind of assets what kind of assets you're trading, guys, but there is some level of post-purchase rationalization, and this is something to be aware of. Because it's going to filter out uh, bad or negative information that's related to what you have purchased. And you're going to highlight and the positive aspects of your purchase. You're going to remember them stronger than like any negativities that's related to your purchase. This is post-purchase rationalization. Let's go to a chart. Let's go, for example, to this is not like flooding a project or anything. For example, this is Phantom and it went up. And then you, for example, after some due diligence, you bought Phantom and it went up, and you went to one of their community meetings and, reading more and more stuff about Phantom. What you're actually doing is, even though you purchased here your Phantom all the way up, you're going to rationalize your purchase here. Then you're going to ask yourself, should I take profit or not? No, because I've went to that event and they're working on this and this protocol, and I'm going to wait, most likely going to do another 10x. And that story you told yourself here, you're going to repeat it here again. This is post-purchase rationalization. This is a really ugly bias. And the real ugly thing is of this bias is this happens unconsciously. You're not aware that you're trapped by this bias. That's why you need to journal. This is why you need a trading community. This is why you want to be, we call this metacognition. You want to be conscious about your own unconsciousness. And this is only possible if you journal, if you talk with people, if you have a tribe, if you read books, if you have enough money to have your own coach or your own mentor. Another bias is loss of person bias. We hate to lose. I I'm gonna give you like a few examples. So loss of person bias is all about um experience a loss two, three, four times. It depends which studies. Um, it depends on the studies. Like there are different studies about loss of person. You experience a loss two, three, four times more than a gain. So meaning, if you win today $100, and the next day you lose $100, you're basically break even. But psychologically, like mentally, you have lost $300, or actually your P&L would be mentally minus $200. This is loss aversion. Oh wait, this basically displays loss aversion. Let's give it a good look. And also, um, from a neuroscience point of view, they've done a lot of research and scans in the brain. The funny thing is, if you think just about a lot, like losing your job, losing money, losing Bitcoin, uh, losing your capital, some parts of your brain will just light up. That's how strong loss aversion is. Loss aversion is actually um, one of the strongest representations of fear. Because loss aversion, what it actually tries to do is it tries to help you with survival. We talked about survival a few slides ago. Survival is actually the main task of your subconscious mind. The main task of your mind is survival. This one, I think, just think about it. You win $10, well, cool, okay, nice. Or replace $10 with $100 or $1,000, $10,000, and then suddenly you lose the equal amount of money, $10, 1,000. It doesn't matter. You're gonna experience that way stronger than any gain. Why is this important to understand? One, it's going to light up some parts of your brain, right? Be aware that after a loss, we are willing to deviate from our trading principles. We are willing to take more risk to compensate that loss. So if this is you, then the best thing you could do is to take a step back. Just take a step back and think about your loss and think about how you um, want to continue. Because losing money is not cool. This model is a pretty interesting model. I want to go quickly through this and then maybe we can check some charts as well. By the way, if there are questions, please let me know. We all lose money. Sometimes there's like a flush, or a crash, or some form of capitulation. What happens when things are capitulating? Well, people are losing money. They're not only losing money, but they're losing hope. They are in a state of denial, maybe sometimes, or they're angry. There are a lot of emotions. The problem I often see is when people lose a lot of money, is they quickly want to learn from this event and want to move on. I think this is a really logical way of thinking, but they are missing some essential steps. One, it's we need to accept reality and to acknowledge the loss, not just by lip service alone, but really we need to take time for this. In an event of capitulation, for example, and you lose, let's say, like 30, 40, 50% of your portfolio, I don't think that you can quickly recover from this loss mentally and then the next day you move on. No, it doesn't work that way. Another misconception is people, they don't allow them to feel these emotions, because when you're angry or sad or depressed, it's actually telling you something. And if you're not, giving yourself permission, you're not allowing yourself to tap into that information. So again, here, like, emotions are not the enemy. It's actually communication. It's actually feedback. You should be able to tap into that feedback. Another good way to digest the loss is to share your thoughts with other friends. I think every one of you, if you take trading serious, and trading is a solo job, right? It's really like a lonely job. It's you who presses on the buy button or the sell button. It's you who's moving the stop loss above your entry. It's you who's going to skill out. It's you who needs to do the journaling. It's you who's doing the charting. It's really good to have a trading buddy. I think everyone should have a trading buddy, preferably someone from your own time zone, same level, or someone who's a level ahead, and have some time, like from time to time, a conversation, like a quick call, like 15 minutes, 20 minutes, week or bi-weekly, or once, or at least like once in a month. I think this is important. Otherwise, all these different bars we just mentioned, they're gonna appear, reappear, and reappear until they're gonna screw you up. Okay, and then you should learn from your losses, because when you're in a state of uh, when you're sad, that's not a place to learn. When you're really angry or when you're in disbelief, this is not a place to learn. This is a place, then you're actually in a place to how to call it, to actually to take a step back. And in this case, a step back is progress. A lot of people, they don't understand this, but a step back, when you lost a lot of money, a step back is progress. Trying to move forward, that's not progress. It's how to call that, is actually punishing yourself. And then we have recency bias. So this is actually like the definition, but we're gonna check the charts as well. So it's a tendency of traders, or it's not only related to traders, but I made this definition in such a way that it fits the trading arena. The tendency of traders to look at only the most recent events while disregarding older but equally important events. But wait, this is also a little bit related to the NLP communication model I just shared with you, right? We delete, distort, or generalize the information in such a way that it fits our filters. Let me check the Bitcoin chart. I think the Bitcoin chart would give us really good examples of recency bias. Oh, sorry, I should have cleaned that chart for you guys. Let me go to the daily chart. Plot 200 MA. By the way, last year we also organized a trading event. You know what the theme was? The theme was the best time is now. We basically marked the bottom with that event. When Bitcoin is going up, for example, this is actually a bottom formation, and it went up, and it was forming here a beautiful hammer, and not only in hammer, it tapped into this 200 MA, and this 200 MA was kind of flattening. So what is a flattening MA telling you? A flattening MA that comes from a trend. This is obvious a trend, right? Like this is the obvious downtrend. There's no denial, right? If you don't see that this is a downtrend, you're blind. When the MA is flattening after such a big downtrend, it means that the trend is exhausted. So we see some signals of exhaustion, and then we see a hammer, and um, there's like this beautiful 0.5 Fibonacci level. People, they didn't see this as an entry. A lot of people, when they see a nice uptrend, then things are going down. What's happening then? What happens then? I want to hear it from you guys. Recency bias will kick in. Because Bitcoin made a really strong move to the upside, and then went down. What will people think? Most people, they will think, biologically, this move will continue. We're gonna go back to the 15 or 12 or 9 or whatever targets they had in their mind. This is a strong form of recency bias. And you see recency bias on the low time frame, high time frame, but you should be able to understand. Wait. You should be able to understand when recency bias can kick in, because recency bias, if you understand when most market participants fall into the trap of recency bias, you can anticipate on that. A good example is, for example, Link. I shared my posts also on Twitter, or tweets, I should say. I can remember this day as the day of yesterday, because I was in Berlin with friends attending a Bitcoin, a Web3 conference. You see here a long consolidation period of how many days? Time is important, guys, in trading. The older the emotion, the stronger. That's how you should see it. 531 days of consolidation. And we can see here, this is just range low, range high, like a ranging. When this happened, what do you think that people? What was actually the perception of people at this time? Oh, it went down after such a long consolidation period. At that time, it was Almost 400 days. We're gonna go down now. We're gonna go down. I decided to buy Link literally here in this period. Not to give myself credit, but just to give you an example of, if you understand market psychology, but also your own psychology, it's going to give you an edge. Not that you only should rely on that, but it's a extra layer of information that can help you with your decision making process. Of course, I also had this this feeling also that, oh, maybe it's not maybe it's not a good idea, and it felt kind of awkward, and um, I'm convinced in Link. But of course, there was also at that time more room for more downside, because the reason why Link and a lot of other coins dropped was because of the SEC saying that Link was a security, or that coins as Link, uh, sh- um, it was something about securities on altcoins. There was also like the whole list with Chili's and Link and like a bunch of other coins uh, that were labeled by the SEC as a security, or a security that shouldn't be allowed to trade. Okay, guys. So this is recency bias and how to understand recency bias. Yeah, this is like an old chart from June, but here again, we see this strong up move and then this down move. And because of this down move, we disregard this up move. This is what recency bias is going to do with you. So because of recency bias, believe me, a lot of traders, especially in the coming months, they um, they're going to experience a lot of mini bear markets. And this has also to do with negativity bias. Negativity bias is telling us that a negative event is stronger than a positive event. So think about this from a non-trading context. If you walk outside, you're walking outside, you're going to the supermarket to buy some stuff. You're passing by nine different people. All of them, they're gonna greet you and say, "Hey, good morning," and gonna give you like a beautiful smell. You just need one person who looks really angry and gives you like this angry face, and and then like that one negative event will overwhelm all these positive events. So we're more sensible for negative events. This has also to do with our negativity, our survival mechanism. Before I move on, we talked about survival, right? The goal of your brain, the goal of my brain is survival, period. And there's also herd bias. When things are going up and everyone is happy, let me go to the Bitcoin chart. Everyone was happy here, right? Bitcoin was going up, going up, going up. A lot of people were bullish. A lot of people were in euphoria. Now, you need to understand that it's really hard to detach yourself or myself from the herd. Why? Psychologically, it feels really good to be part of a herd, because the brain subconsciously will think, no way, so many people with all my favorite gurus are wrong. And you'll go with the crowd. This is how it works. A few years ago, a few centuries ago, people were actually living in tribes. If you were abandoned by your tribe, so you're not part of a herd anymore, you will be left alone with you and yourself. No one is going to protect you, so you're um, um, easy to rob, easy to be killed by animals, by people with bad intentions. We don't like that. We like to be part of a big community. This is a good thing, but in trading, it's not a good thing. Trading, what I'm actually trying to tell you here, guys, is trading goes against your biology, your neurology. It's simple as that. Every trade you make, everything in the market It's actually going against our own biology and neurology. And if you don't understand this, um, then I hope that I made you understand this. Everything in trading is going to go against your own biology, how you normally perceive things. Another important thing, guys, is your subconscious mind and the way how you talk to yourself. I'm not sure if any one of you have has ever eavesdropped someone. Well, I'm gonna tell you a secret. There's one mechanism inside your head eavesdropping you all the day. And that's your subconscious mind. We all have like this internal dialogue, the way how we talk to ourselves. If our internal dialogue is negative, um, then what you're actually doing is giving negative commands to your subconscious mind. Your subconscious mind will do its best to manifest that. An example, if you, for example, you're trading and you're losing money, and you were gem hunting, for example, then you spotted a few gems, gem A, B, and C, for example, and you thought, oh no, maybe it's not a good time. And then the next week, you're going to open the chart and you see that gem A, B, and C did 100x, and you're starting to tell yourself, I'm never gonna catch these gems. I'm never gonna catch these gems, or I'm not good enough to catch these gems. And if you repeat this enough, your subconscious mind is not stupid. It's going to pick out all of your internal talk and translate that into a belief. If your belief is that you cannot find good gems, or if your belief is I'm not a good risk manager, or if your belief is I'm not a good trader, most likely that's it's going to be true. That's most likely that's going to be your reality. Really, that's going to be your reality. So change the way how you think. Not saying that positive thinking will make the difference. The key takeaway is reframe things. For example, if you made like some mistakes in risk management, you could tell yourself, one, I'm a bad risk manager. So what you're actually doing is like you're identifying yourself with something negative. I'm a bad risk manager. Or the other way around, or the other way of thinking is I'm learning to become a better risk manager. You see, two different things. Like, I mean, the same goal, but the two different way of thinking. Hope this makes sense. Because there's one thing you always do. If you, it doesn't matter if you, whatever you do, there's always this internal dialogue. Make sure that this internal dialogue is helping you to move forward rather than holding you back. Look, trading buddies might cost money. I mean, you can also have friends, right, who are in the same position as you. You help them, they help you. They're not going to cost you money. But again, guys, I believe that everything has a price. Um, Knowledge has a price, but so does ignorance. If you're able, if you're willing to invest in yourself, most likely you're going to yield a lot of profits. Believe me. Look, we talked about post-purchase rationalization, right? We rationalize our purchase or our service in such a way that's for us really hard to sell, and it's really hard for us to scale out because we have that this connection with our purchase. Sorry, guys, there was an alert from TradingView. Confirmation bias is actually really related to this. Let's read quickly like the definition, and maybe we can go through a few charts to really walk you through what confirmation bias really can do to your performance. So confirmation bias is a tendency to search for, interpret, favor, and recall information in a way that confirms or supports one's prior beliefs or values. You're gonna see this with people who are fan of, let's say, like a certain football team, or when you subscribe yourself to a religious community, or I don't know. It doesn't matter. There's like confirmation bias is really literally everywhere, especially when money is involved. Because when I am, for example, I buy, let's say, name some coin, um, Solana, for example. I buy Solana, and uh, I'm on Twitter. So what my mind actually is doing is I'm gonna delete, basically I'm gonna ignore everything that's bearish about Solana and only accept things that's bullish towards for Solana. So suddenly you will find me following people who are Solana perma bulls. uh, I gonna block people who are fudding me because going against my bias, I see that as FUD. Just to give you an example, this is what confirmation bias can do. Is going to alter your reality. Again, the map is not a territory. All these biases, it's actually a map. See it as a map, but the territory is richer than the map. Hope this makes a little bit sense, ladies and gentlemen. Um, it's funny that this chart was from June. I kid you not. This chart was from June 2023. Not sure what. Yeah, another thing is with crypto, you can always be surprised. So don't be surprised if things are going higher than anticipated or lower than anticipated. Make sure you're aware of that. And this is actually a quote from Ned Davis. Let me read this one because this one is really funny. There are two types of investors. You can easily replace investors with traders. There are two types of investors, be they large or small. Those who don't know where the market is headed, and those who don't know that they don't know. I love this quote. Essentially, nobody knows, and yet you can create like an edge. And if you understand the basics of market psychology and trading psychology, trust me, you're gonna have an edge because you will understand where people are not willing to buy and when people are not willing to sell. Whenever things are going up, for example, this was Bitcoin. This was like a massive move from, let's say, like from here to here. Everyone is in euphoria. When everyone is in euphoria, you should ask yourself, are there any people left who wants to be part of this uptrend? I'm gonna repeat myself. Is there anyone left who wants to be part of this uptrend? If everyone is part of this uptrend, who is going to sustain this trend? This is a legit question you should ask yourself in the next cycle. If everyone is in profit, who is going to join this trend to sustain this trend to the upside? But also the other way around. We talked about Bitcoin going down while the MA was flattening, which is a clear signal of exhaustion. Then ask yourself, if everyone is bearish, who is going to sustain, who is going to join this trend to sustain this trend to the downside? This is a question you should ask yourself. Another question you should ask yourself is who is in profit and who is in loss? And I do this often with, for example, with altcoins. When you check like the altcoins, who is in profit, who is in loss? Who is actually in profit here? You will say that everyone who bought, from it's actually really simple. They in loss, they are in profit. I'm not against Cardano, but it's just an example. But I rather prefer to, when I invest, trading, it doesn't matter. But when I invest, I'd rather prefer to have something that has to invest in something that hasn't experienced two bull markets already. Let's go, for example, to algo. Fundamentals are solid. And then ask yourself here, who is in profit? Not so many people are actually in profit. Most people who bought Algorand, and I'm sure there's still a lot of backholders, they're in loss. And then then you can start to chart your coin, or you can chart and think, okay, this could be maybe like a breakout. What is the BirbicatorPRO telling me? Is there some increase of volume? What's the risk reward rate? And then, I mean, a lot of people they think, okay, Bitcoin went up, did 130%, some altcoins as well. Believe me, it's not too late. There are a lot of opportunities. The Arbitrum, a really interesting one. It doesn't have a lot of history, of course. I think the fundamentals are really good. But also here, like, ask yourself, who is in loss? Who is going to sustain the trend, even though it doesn't have a lot of price history? Yet you can ask yourself this question here with Band. Ask yourself, who is in loss? Who is in profit? Who is going to sustain this trend to the downside? And this is what you could do with a lot of coins. For example, what's a good example? Mm, yeah, here, Peer. This is basically, Peer has done what Link did, right? A long consolidation of 500 something days, and then bomb breakout. But here again, perhaps Peer is really good coin to invest. I'm personally not really interested to buy. But when it was like consolidating here for a long time, you should also ask yourself, who is in profit, who is in loss. I think I talked not enough. If you guys have like any questions, just drop these questions here, right? Drop some of these questions, because I'm happy to help. Thanks for the kind words, guys. Like, listen, it's really my wish to help you and to make the most out of this crypto space. There's a lot of money to make, really. There's a lot of money to make in this crypto space. I invested in this year, in January, in February, in March, June, July, comfortably, really comfortably. I think I'm gonna yield a lot of profit next year, maybe even in 2025. Who knows? But I also gonna be really conscious about myself and how I see things. Always make sure that understand you're a human. A lot of emotions will appear. Don't fight them. Allow them, understand them. This is the real alpha. I'm gonna give you an example. If you have like a ball, like a big ball, you're in a swimming pool, you're trying to hold this ball underwater, right? How sustainable this is? How long can you hold this ball underwater? Maybe a few minutes, maybe even like an hour, but suddenly you're gonna have a lot of tension in your body, and the ball will pop out and gonna smash your face. This is actually how emotions work. Don't try to uh, don't think you can control them. Just allow them, but don't see it as the reality. Just information. That information can help you. So, guys, I think it's time to divorce from all your biases. Okay, divorce from these four biases. Listen, if you understand, write them up. Post-purchase rationalization. If you understand this, you're way ahead of many other traders, because they even don't know that there is such a thing as post-purchase rationalization. recency bias. We now have an idea what recency bias is. But what does recency bias do with us and with other market participants? We now understand what loss aversion bias is. When we lose something, that pain is 2 or 3 times stronger than winning something. This is like mental pain. This mental pain will eventually lead to bad behavior, could lead to bad behavior. And then there is like the confirmation bias. We only allow information in such a way that, oh, wait, here it is. Only allow information in such a way that it fits our general view of the world. Um, Often on Discord, I share a lot of trading psychology write-ups. I talk often about biases and how we can be blinded by having a price target or by following people, about analysis paralysis, about journaling, about understanding yourself, become a better version of yourself. I would say join our trading event. We still have a few days left. We also shared a lot of profitable calls. Out from my head, it was Theta, YFD, Ripple, Falcoin, many others. I cannot even recall them. Some of them are still in the buy zone, so I would say check them out. Check them out, guys. And thank you guys for being here with me. If you enjoyed this live stream, I'm not gonna ask you any money, not even like a penny, but hit the like button, okay? Hit the like button and tell also people on Twitter that you enjoyed this live stream with me about trading psychology. Well, yeah, look, books, there are a lot of books, my friend. Um, let me share like a quick titles, okay? I like the book Trading in the Zone. It's a really old one, okay? Um, there is like the book of. Do I have it here? Yeah. Okay, guys, I'm gonna show some books. This book, oh shit, it's because of the. I'm gonna write the title, okay? The Mental Game of Trading is quite an interesting book. Then there's like another book. What's her name again? Book. Sorry. Um, Look, Think Faster, Talk Smarter is also an interesting book, but it's not really about trading psychology. I'm gonna drop a list of books on Discord. The books I actually read myself, and of course, read stuff written by Jimie from the Burp Nest. There's a dedicated trading psychology channel. The name is Trading Psychology, of course. And every week, at least like once in a month or 2 3 times in a month, I share write-ups um, about trading psychology. Okay, guys, thank you so much. Give again this video a like, share it with your friends, and happy to talk soon. Love you all, guys. God bless. Bye bye.